Welcome to the channel, The $25 Investor, where we prove that you do not need thousands of dollars to start building wealth. You only need consistency, patience, and a simple plan. Imagine this. What if just $25 a week could change your entire financial future? That is less than what many people spend on fast food or coffee. Yet, when invested wisely, that small amount can grow into something powerful over time. On this channel, we focus on one simple idea: small money, big discipline, long-term wealth. We are not chasing hype. We are not gambling. We are building real wealth step by step, week by week. Today, we are going to talk about a company that many investors consider one of the most stable businesses in the world. A company that has survived wars, recessions, inflation, and market crashes. A company that people rely on whether the economy is booming or collapsing. That company is Johnson & Johnson, also known as Johnson & Johnson. And here is the key question. Can investing just $25 every week into Johnson & Johnson actually help you build long-term wealth and possibly protect you during a recession? Let's break it down step by step. Let's start simple. What happens if you take $25 every single week and invest it into a strong, stable company like Johnson & Johnson? That equals about $1,300 per year. Now that might not sound like a lot. Many people think investing only matters if you have large amounts of money, but that is not true. The real power comes from consistency and compounding. When you invest regularly, you are buying shares over time. Sometimes the price is high, sometimes the price is low. This strategy is called dollar cost averaging, and it helps reduce risk while building your position steadily. Johnson & Johnson is the kind of company that fits perfectly with this strategy because it is not about quick gains. It is about steady growth, reliable income, and long-term stability. So instead of trying to time the market, you are simply building your wealth slowly, week after week with discipline. Johnson & Johnson is one of the largest healthcare companies in the world. It operates in multiple areas, including pharmaceuticals, medical devices, and consumer health products. Think about products people use every single day: medicine, surgeries, treatments, and essential healthcare solutions. Here is why this matters. Healthcare is not optional. People do not stop needing medicine during a recession. They do not delay critical surgeries forever. Demand for healthcare remains strong no matter what is happening in the economy. This is what makes Johnson & Johnson a recession-resistant company. While other industries suffer when people cut spending, healthcare continues to generate revenue. This gives Johnson & Johnson a stable cash flow, which allows it to pay consistent dividends, invest in research and development, and continue growing over time. Johnson & Johnson is also known for its long history of paying and increasing dividends. That means investors are not only gaining value from stock growth, but also receiving income along the way. This combination of stability, demand, and income is what makes Johnson & Johnson attractive for long-term investors. Now let's compare J&J to the broader market, specifically the S&P 500. Over the past 3 years, the S&P 500 has grown about 20%, while J&J has grown approximately 20.09%. So in the short term, J&J is actually very competitive with the overall market. Over 5 years, the S&P 500 has delivered around 13.65%, while J&J delivered about 10.92%. Over 10 years, the S&P 500 averaged around 15.72%, while J&J delivered about 11.24%. So what does this tell us? J&J may not always outperform the market, especially during strong bull runs. However, it provides something extremely valuable. Stability and consistency are key here. During market downturns, companies like J&J often fall less and recover faster because their business is essential. This is why many investors include J&J in their portfolio as a defensive stock. This video is for educational and informational purposes only and should not be considered financial advice. I am not a financial advisor. The examples and opinions shared in this video are based on personal research and experience. Investing involves risk, and past performance does not guarantee future results. Always do your own research or consult with a licensed financial professional before making any investment decisions. Let's take a closer look at Johnson & Johnson's growth performance. Over the past 3 years, Johnson & Johnson has delivered approximately 20.09% growth. Over 5 years, the growth rate is about 10.92%. Over 10 years, the growth rate is approximately 11.24%. This shows that Johnson & Johnson provides steady, reliable, long-term growth, even if it is not the fastest growing stock in the market. And when combined with dividends, the total return becomes even more attractive for long-term investors. Now let's look at how much you actually invest over time if you commit to $25 per week. In 1 year, you invest $1,300. In 5 years, you invest $6,500. In 10 years, you invest $13,000. In 15 years, you invest $19,500. In 20 years, you invest $26,000. In 25 years, you invest $32,500. In 30 years, you invest $39,000. This shows that even small weekly contributions can add up significantly over time. Now let's see how your money could grow. After 5 years, you invested $6,500 and it grows to about $9,393. After 10 years, your $13,000 grows to approximately $21,119. After 15 years, $19,500 grows to about $40,038. After 20 years, $26,000 grows to around $65,257. After 25 years, $32,500 grows to approximately $92,738. After 30 years, $39,000 grows to about $135,994. This is the power of compounding over time. Now let's take it one step further. What happens if you double your investment to $50 per week? Your yearly contribution becomes $2,600. After 5 years, you have invested $13,000 and your portfolio grows to approximately $18,786. After 10 years, your total investment of $26,000 grows to about $42,239. After 15 years, your $39,000 grows to around $80,076. After 20 years, your $52,000 grows to approximately $130,515. After 25 years, your $65,000 grows to about $185,477. After 30 years, your $78,000 grows to roughly $271,989. This clearly shows how increasing your weekly contribution can significantly accelerate your wealth building. Now let's look at what happens when you invest $100 per week. Your yearly contribution becomes $5,200. After 5 years, you have invested $26,000 and your portfolio grows to approximately $37,573. After 10 years, your $52,000 grows to about $84,478. After 15 years, your $78,000 grows to around $160,152. After 20 years, your $104,000 grows to approximately $261,030. After 25 years, your $130,000 grows to about $370,954. After 30 years, your $156,000 grows to roughly $543,979. At this level, you can clearly see how compounding begins to create life-changing results. Now let's increase it further to $150 per week. Your yearly contribution becomes $7,800. After 5 years, you have invested $39,000 and your portfolio grows to approximately $56,360. After 10 years, your $78,000 grows to about $126,717. After 15 years, your $117,000 grows to around $240,229. After 20 years, your $156,000 grows to approximately $391,545. After 25 years, your $195,000 grows to about $556,432. After 30 years, your $234,000 grows to roughly $815,969. This is where your investment begins approaching financial independence territory. Now let's examine $200 per week. Your yearly contribution becomes $10,400. After 5 years, you have invested $52,000 and your portfolio grows to approximately $75,147. After 10 years, your $104,000 grows to about $168,956. After 15 years, your $156,000 grows to around $320,305. After 20 years, your $208,000 grows to approximately $522,060. After 25 years, your $260,000 grows to about $741,909. After 30 years, your $312,000 grows to roughly $1,087,958. At this level, you are officially entering millionaire status, driven by consistency and time. Now let's move to $250 per week. Your yearly contribution becomes $13,000. After 5 years, you have invested $65,000, and your portfolio grows to approximately $93,933. After 10 years, your $130,000 grows to about $211,195. After 15 years, your $195,000 grows to around $400,381. After 20 years, your $260,000 grows to approximately $652,575. After 25 years, your $325,000 grows to about $927,386. After 30 years, your $390,000 grows to roughly $1,359,948. Now you can clearly see the massive impact of both higher contributions and long-term compounding. Finally, let's look at $300 per week. Your yearly contribution becomes $15,600. After 5 years, you have invested $78,000 and your portfolio grows to approximately $112,720. After 10 years, your $156,000 grows to about $253,435. After 15 years, your $234,000 grows to around $480,458. After 20 years, your $312,000 grows to approximately $783,090. After 25 years, your $390,000 grows to about $1,112,864. After 30 years, your $468,000 grows to roughly $1,631,938. At this level, consistent investing can completely transform your financial future. So what does all of this mean? It means that you do not need to start with a large amount of money to build wealth. You can start with just $25 a week. And over time, through consistency and patience, your investment can grow significantly. Johnson & Johnson stands out as a recession-resistant company because people will always need health care. This gives the company stability, steady revenue, and long-term growth potential. And as you saw, if you increase your weekly investment to $50, $100, $200, $250, or even $300, the results can become life-changing. In the next video, you will explore other companies such as Nvidia, Apple, Microsoft, Meta, Tesla, Amazon, and Google and compare their performance. You will discover which company has the potential to make you rich by simply investing consistently, starting with just $25 a week. If you enjoyed this video and want to see more content like this, make sure to like and subscribe so you can get more videos recommended to you. Thank you for watching.